How are you?
Well, we're live here, June 22nd. Anyone following, please take the time to go to our YouTube channel, Rolland Market Mashup, and subscribe. Dow, last night when I went to bed, looked like it was going to be up a couple hundred, and now it looks like it's going to open down a little. Dad, I'll throw it to you. What are you looking at today?
It's not going to be down a little.
What's up, Mike?
It's up.
Well, look, the futures are up, but the actual market itself, no.
We're going to have a big sell-off this week. I would get out of gaming.
It feels like the market is it's kind of exhausted from everything that's been going on, and it's trying to find either a new segment of the market to go after, and maybe it's pharmaceuticals, something neutral that's away from the economy opening or the economy not opening. But it's got a lot to digest. This election coming up is getting more and more headlines, and it doesn't look good for Trump, at least yet. And
yeah, I think I watched the rally the other night. I think he might have ruined his reelection with some of the stuff that came out of his mouth the other night. Even me, who voted for him, I was just kind of thinking he came out and he played too much into his staunch supporters in a way. But, yeah, I think we're going to be in for some turmoil in the market with Biden beating him, at least short term. That's why I'm not bullish all of a sudden, because I'm starting to think that's no shoo-in anymore. He's just not getting it, the actual problem in the country. So it's going to be hard for him to win.
yeah, and it's it's such a different election from ever before, and I think that plays into Biden because
it does. It plays into a seasoned politician, not someone that's impulsive and just going off instinct. That worked 4 years ago. It's not going to work this year.
But the best thing for Biden is to just stay away. The less he says, the better chance he has.
Yeah. So, yeah, the market, like any election year, we're in for, some interesting times ahead.
Yeah. And, having said that the election's going to affect the market, we don't really know.
Yeah, I was just going to say the markets might not actually
I think if there's a good chance Trump's actually losing, of course it's going to affect the market short term, at least until after things settle down with the corporate tax rate. I mean, I don't see how that wouldn't impact things.
Well, the corporate tax rate, I think they're expecting it to go up slightly if Trump loses. The big question is what they do with capital gains in addition to that, because I think that'll affect a lot of the short-term thinking of people that have been in this market a long time.
Well, if they have half a brain, they'll do nothing, or else it'll cause way too much of an upheaval. Like when you really think about it, with what just happened with the pandemic, it would be asinine to change capital.
That could be true. And, it could be that they'll look at the economy when he gets in, if he gets in, and not react as fiercely that they might. But anyway, enough of politics. What else is on, Dan?
Well, last week I know we talked about this a little bit, but I've been doing more day trading, and last week I was doing a lot with U1K, mainly on the short side, and was moving in and out of it all day and had a really good day with it, but learned a valuable lesson. And I know I called you kind of fired up about it. Essentially what happened was, and something that I've kind of always done that clearly I shouldn't have done, but when I make trades, I've always had the tendency to click the all or none button if I'm dealing with at least 300 shares, just because for the way my mind works and trying to time the trades and do the math in my head of what the gains or losses will be, I like to be either in or out. And what happened was I was short U1K. I started shorting it from $5 down and was moving in and out of it as it broke support levels. And on my last short of the day, I was hoping to short it down to 385, and that was my limit of where it was going to cover the short. And what happened was I had it short at 420, and I was hoping to get down to 385, which would have been amazing, 35 cents per share. And I was short like 20,000 shares. And at first it got kind of dicey. It got up to 438. I had my loss limit at 440, so it almost hit, and then I would have just lost. But then it started to drop, and it made its way down all the way to 383. And I was excited thinking that my short had covered at 385 because I watched it fall below that price. And then I slowly watched it come right back up. And then I had to edit my order, and I didn't ended up getting out until it got to 410. And then I called E-Trade to see why my order didn't hit when it was at 385. And they told me it was because I had an all or none trade. And they kind of made me feel like an idiot. And they were like, don't do all or none trades. And that was a nice lesson learned for me not to do all or none trades, because I would have gotten out at 385, would have been an amazing gain.
Well, that's a great lesson for when you're shorting a stock. I don't think that makes as much sense when you're buying a stock on the up with a limit order. I think it's a much different psychology with that when you think about it.
Well, no, the whole thing with all or none, I think people used to do that a lot because commissions were really high. So if you had, let's say, 1,000 shares to buy and you put it in all or none, you knew you were going to have just one trade, one commission. With not all or none, just a limit order, you could have ended up buying 100 shares, paying full commission on that. You're still long 900. And then you have to put in a new order if it doesn't get down there, and you're forced to pay 2 commissions or 3 commissions. So that's why I think a lot of people used all or none. But now there's no commissions. So it's almost like, who needs that? Just limit orders.
And my thought process was like, oh, I don't want to be stuck with a couple thousand shares when I get rid of the rest. But again, the whole mentality screwed me because I wasn't able to get out of the order. And that was an interesting lesson learned, and a lesson learned indeed. And it just makes me bring up the day trading in general. I mean, Dad, I know that used to be something you did. You even took off a little bit from working in between Solomon Brothers and Credit Suisse when Jeff was born, and just day traded from home for like 6 or 7 years. What were some of the things that you would look at? Like, talk to us a little bit about day trading.
Well, first of all, at that time you had commissions. So things were a lot different. You were much more in the thinking of what is the commission going to be. If you go in and out 20 times a day, you're paying a lot of commission. So that made everything different than the way you guys look at it today. And at the end of the year, if you added up your commission, you'd be lucky if you made as much money as the total commission you paid out, which is real interesting because it really is a distinct advantage today. The other thing is you couldn't get the information that you can get now. At that time, you had to pay for services to get real-time information on the market. So that's another distinct advantage. You don't have to buy all kinds of trading vehicles that you had to do back then. And Danny, you were mentioning level 1, level 2.
Yeah, well, I have it pulled up right now, and this is something that I've been learning more about this weekend, and I'm wondering how much you used to use it. But just as an example, I have Hertz pulled up. Not that it's a stock we talk about a lot, but on the left, I have the time and sales, and on the right, I have the actual ticker. And I mean, Dad, can you talk about how you used to use this, if at all, and if it's something that, you would keep close to your chest, or if it's kind of just...
it was always important to know how deep the market was if you're buying a stock or selling a stock. And when I say deep, if you're looking to buy a stock, you want to see how many shares are being offered kind of up the levels. Like, in other words, if the stock is trading at 8, what's offered at 802, 805, 810? Is there a huge amount of stock that's on the books at those levels? Or, vice versa, if you're selling a stock, how much is bid for down below? And The only thing with all that is you don't know what's behind each level. People can put in to buy 5,000 at a level, and as soon as it hits, there's another order right there to buy another 5,000. So their total order could be hundreds of thousands of shares, and they're only willing to show you 5,000. And there's computer programs now that automatically will enter an order at a price once it's the other one is executed. So it gives you some information, but it really doesn't give you a lot of information.
So from what I've been kind of reading up on it, is it's all about looking at the different waves of momentum. And maybe you could talk about like the different colors and what they truly mean. I mean, from my understanding on it, when it's the light pinkish red, it's people unloading shares without really caring about the price, like almost urgency sells. And then the green and red, or whether or not it's the ask or the bid. And first off, am I right when I say that? And second off, how important is that information? And maybe you could talk about like the exact trends you're really looking for. Like, again, I have Hertz pulled up right here. And from the way I'm reading this, you're seeing when it's red and when it's lighter pink seems like more of a bearish sign than anything. And, you know, you could look at the different sizes coming in undersized, where the green orders are just for a few shares, whereas these light pink and red orders are for thousands and thousands of shares. So it's showing that the real money is trying to get out of this stock, not get in it. And you have, you know, people buying along the way.
Yeah, but, you know, every system is different. I mean, green is up and red is down for the most part. You could change the colors on it in your system usually to whatever colors you want, but that's usually what you're dealing with here. And it doesn't mean a lot because, as I said, they could disguise orders to make them look one way when they're going another way. They could easily, someone just putting a few hundred shares out to buy may have hundreds of thousands, and it could be the opposite. So if you see a big, you know, taking the offering, that's aggressive buying. And if people are just sitting on the bid waiting to buy stock, they're passive buying. And obviously that's less aggressive. That doesn't mean that that person or company doesn't have more shares to buy than the aggressive seller. It's a moment in time. And it's very difficult to trade off of the concept of this, you know, is it red or is it greener for that particular 20 seconds or 30 seconds? So I wouldn't take it too seriously, you know, over a few minutes.
Gotcha. And then, yeah, I mean, the other thing that's kind of interesting to look at when you are looking at doing day trading in general, and again, I'm wondering if this was something you would look at or what you really looked at in general, but really looking at the pre-market movers and seeing which stocks, whether it was to the upside or downside, looked like they were having the most amount of movement, not just in gains and losses, but in actual share volume.
Yeah, I think the volume is the most important part of pre-market because you'll see a lot of biotechs that'll have, you know, like a couple of thousand shares traded up $1. And that tells me, you know, most of the time that's a guy who's long the stock trying to get it higher, knowing it's illiquid in the pre-market. And if he, you know, buys a few hundred shares up 70 cents, maybe he could start a trend on it. And it, you know, it rarely works that way, but I think that's more of a hope and a prayer by some people.
So you're talking about if the volume's lower than normal.
Yeah, either lower or low. I mean, if you see a stock up big or down big on very low volume, you know, I'd be very suspicious and I would not want to be playing, you know, at those low levels or higher levels unless I had a long position and I sold some.
So what about the opposite though? What about when you see these really big pops, which is something that seems to be an indicator that when it opens, it's going to follow in that trend, and sometimes a very, very big way. So, for example, this stock, which, and I'm just pulling out an example here, I've never even heard of this company, but SynTX Technology, which right now pre-market is up 210%. The symbol's SINT, and the volume's significantly higher than normal. Is that, and obviously, you know, you want to see if there's news that came out, which there's some news about COVID-19 related to the stock. But when you see a situation like this, is that something that you're looking for? Like, okay, this volume is way higher than normal and it's sets to be open huge pre-market. It seems like more often than not, when that happens, once the market opens, you really see the momentum take off with whichever direction it was trading, whether it was down or up with the volume.
Yeah, well, I mean, the first warning sign on that stock when I look at it is it's a penny stock. So you're getting a lot of retail that are in this game, whatever it is. And the news is going to be everything. I mean, if that is solid news and they really have something substantial, then you got to think about it. But most of the time, you're going to get a few people that are excited by it. But, you know, unless the news is substantial, that's probably a better short than a buy. You know, maybe not on the opening, but right after it, in my view.
Yeah. And is that like when you used to day trade, would you kind of go into the day seeing which stocks had?
No, because as I said before, I used to just pick a few names and stick with those to go in and out of because I knew the stocks. I was not looking for the news of the day or the hot stock of the day because you basically get distracted. And if you're used to following a handful of stocks, you might miss some good stuff within the names you're always watching. And you don't always have to do a trade. It was more swing trading than day trading. You know? And I think when there was no commission, it was a lot better to play it that way. Now, I still think you should stick with a few names and not follow the stock of the day. But you could trade it more because there's no commission.
So, Mike, you think the market's heading for a sell-off this week? Are you kind of repositioning and freeing up more liquidity, or what are you thinking?
No, I'm just going off my gut and switching up positions based on getting out of Penn right at the open today. I'm waiting for that and DraftKings to fall off a cliff a bit before getting in again. I'm going to sell off my Fiverr and Chegg that I made some nice money on in a day here at the open. And I just think there's been way too much optimism in between these protests and just the unknowns now with the Trump thing. I just don't see, like, sports, for example, are running into major red flags across the board. And I'm starting to think the NFL season might not even be realistic. So it makes it impossible for me to be, and I'm a rational optimist too, but it makes it tough for me to be that gung-ho about going ham right now. So I'm definitely going to be making some sales this morning and then kind of seeing what happens. I was shocked that the futures weren't down huge, honestly. I thought I'd wake up to minus 600 today. So off that alone, I'm going to take advantage of it not being that and dish some stuff and see what happens here.
You know, one of your names, Chewy, was the price target was raised to 45 by Morgan Stanley, and they left at an equal weight.
That to me is kind of in a holding pattern. It's not that sexy for a while.
The other big news, you know, a lot of these retail guys have been playing the airlines, and American Airlines is raising or trying to raise a shitload of money, and that's why that stock and the whole group is under more pressure.
That was one of the names that came on the radar of a stock trading on high volume this morning that looked like it was
American Airlines.
Yeah, that looked like it was set to open down, that based on the momentum and volume could open way more down than what the pre-market is. And that's a stock that, you know, I might look to short this morning as the market opens to trade out of. I'm not saying I'm going to, but that's like the indicators that seem to make the most sense when you're trying to day trade is, again, what the momentum's doing pre-market with the volume one way or another.
Yeah, I mean, American Airlines is in the highlight for sure, and people will see how easily it is for them to raise the money, and the stock will react to how easy it is. But, you know, the feeling pre-market is if they want to get the stock deal down, you got to get the stock much lower than where it closed Friday, and it's trading around 14.58 right now, which is down 41, 42 from Friday. So that's not surprising, but the problem with playing those names is whoever is running the stock deal and the bond deals, I don't know which broker's working on it, they are going to have a good picture of what's going on. And depending on how that book fills up, you'll see the stock move up and down based on what people think. I mean, the hedge funds will short this stock knowing that they're going to get stock in the deal. So if they price this thing, let's say at 14, and they're shorting the hell out of it between 14 and a half and 15, it's a quick 50 cents for them. So, and the top hedge funds know they're going to get stock on the deal because they're big customers of the brokers.
And they know the price that they're going to get it at.
They don't know the price, and the price is totally based on how much the demand is. So sometimes you'll see these stocks start to go up because they're oversubscribed, and the hedge fund will talk to, let's say Morgan Stanley is running the books, and they say, listen, I don't think you're going to get more than 10% of what you thought you were going to get because the stock is much hotter than we thought it was going to be. And it looks like we're going to price it, let's say at 14 and a half. And this guy's short 1 million shares and he thought he was getting 1 million shares. Suddenly he's got to buy 900,000 in the open market. So there's a lot of that goes on. And, it's a real pro game. So it's hard to get in the middle of it and try to figure out if it's a good short or a good long year.
Sucks being caught in the middle and not being on the good side.
You just don't have enough info on these big story names to have an advantage. Not that you ever have an advantage, but you think you do.
Yeah. No, definitely. And I keep looking back to this time and sale shade on Hertz pre-market. It looks like this stock's just set to fall off a map, if I'm reading this right. And I'll admit, this is somewhat new to me, so I have to understand it more before I put my money to it. Because
well, I don't know what that's showing you, Dan, because it was hard to see from where I sat, but the stock's trading at $1.59, $1.60 right now. And that's what it should show you.
Well, no, that is what it's showing, but it's also showing that all the momentum seems to be trying to push it way down. You have a lot of big time sellers and real money trying to sell, and then really small time money trying to eat up whatever's being sold. And it almost looks like there's a heavy disproportion of people trying to get out versus people trying to get in, to the point where a lot of the people trying to get out are doing it without even caring what price they get out at, which is one of the indicators that seems to be something that's going to push a stock way lower. So, Dad, are you doing anything this week? I mean, I know you always have pretty sizable cash positions just in case there's dips anyway. So it's not like you need to necessarily prepare if the market's going to start heading in one direction or the other. Well, I will say, I know we talked about this yesterday. Mike Santoli put out an interesting piece this weekend on CNBC, kind of making the argument that the reason we're not in some sort of bubble is because everyone's saying we're in a bubble. And he was making a lot of interesting comparisons, saying how a lot of people keep comparing the NASDAQ to 1999. And he went on to say that in 1999, the NASDAQ was trading 88 times multiple, whereas right now it's only trading 25. And that's made up from really strong companies. So he was arguing that the bear case of this market is the same bear case that you've heard for the last 30 to 40 years. And that's that it's not sustainable when you pump liquidity into it. And he even went on to say, watch in the comments of my Twitter feed right now after posting this, how many people argue that we are in a bubble. And that should tell you that we're not in a bubble. And then showing up, I was looking at the conversation underneath, and he was dead on. Everyone was like, oh, we're in a bubble because of this. We're in a bubble because of that. So I thought that was interesting. I like that guy a lot. I always listen to what he says because he breaks things down just from a very technical standpoint on TV, all emotions aside. So
yeah, and I find him very calming for these commentators. Most of these guys, that you feel the panic coming out of their mouth.
Yeah, they do that purposely.
Well, whatever it is, Mike Santoli is even keeled, and I feel like he's a reasonable thinker, and I just like the way he comments on the market.
This is
not that he's right, like everyone else, but
we're heading into a huge bull market run, and that's what this is. There's going to be some short-term kind of iffiness, but there's no bubble.
Yeah. Who knows? But we got to look at what we've got from day to day. If you're day trading, and it does feel scary, which is usually kind of bullish.
Yeah, I know. That's why I want to kind of just keep buying.
You've already changed your tune from 20 minutes ago.
No, yeah, I'm doing exactly what I said earlier. When I'm up stock in a day, I sell it.
Just to clarify, Mike, it sounds like you think there's a dip coming, but that's just a buying opportunity for.
Yeah, I'm going to be taking advantage of the dip in the gaming that happens this week off this sports stuff that I know is coming. Give it a couple days. I think you'll have way better entry points in DraftKings, maybe Penn. I know they don't really correlate, but I think that sector specifically, you're going to get much better bargains on from this weekend news about spring training locations changing, Fauci coming out about the bubble with the NFL. It just seems like the sports are not a shoo-in for coming back at all. The way
you know what I'm thinking more and more is that people that have some money are starting to plan some road trips big time. Today's the first day of summer or second day, I don't know. And people are so antsy to get away.
I'm with you. I'm burnt out.
I'm watching like stocks like Winnebago, which I've actually watched this stock double without owning it, and it's driving me crazy.
So why don't you buy it?
But because it keeps going up, I feel like I totally missed it for the last.
You're going to say that in 2 weeks after it doubles again.
But Winnebago's not the only stock like that. I'm thinking now maybe Ford. People want to get a new truck, or
I like where your head's at with Ford. I was looking.
It just feels like that play is not done, because it's just going to continue for the next few months. People wanting to get away. Let's get a new car, take a road trip or a truck. If you're living in Denver, everyone you talk to is going to Moab or.
So Camping World, I know that's gone on a run, but those stocks are why don't they have more room to run?
They probably do have more room to run. And
their CEO bought more stock last week.
Bob, help Mike and I make some sort of decision on USFD. I've been getting on this stock. Part of me thinks we just caught it during the dip. I mean, this is the 1 year chart.
I like the stock right here. The stock hit the, I'm looking at the 1 year chart. I don't know what you got up over there, but 1920 is the level of the 50-day, and it's right on it. And that's usually a good place to buy the stock. If it broke down from here, I'd be really worried, but it looks like a good level for entrance. So if I was still in it, I might buy a little more here, but have a stop probably around 18.5, because then it's just breaking down. Where is it today?
More of this stock. I hate this company.
It looks like it's the bid's 1906, the ask is 1947.
Yeah. And fundamentally, I think people are selling the stock because there's so many restaurants that are closing up around the country.
Yeah, I don't know if this is even a good, when you look at the margins on this company, I was doing some homework on them this weekend. Terrible. They made acquisitions that haven't actually helped their overall company. That's the only reason they were growing at all last year. I don't know. I'm not even sure if I'm staying in this.
Mike, let's do picks of the day then. What's your pick of the day? Even if it's a sale, it sounds like you're getting out of gaming.
I'm getting out a pen first thing at the open. I'm also selling my Fiverr and Chegg to open up some cash because I made a quick buck on both of them. Made a phenomenal call on Chegg Friday. Went up 10% in a day on it. So I can't just hold on to that with that kind of gain. It's greediness.
Bob?
I'm going to go with Ford. I think it's okay. It stocks up about 5-6 cents in the pre-market. I would buy it here and have a stop at around 620.
How about Sabre, Dan? What are you doing with that?
Well, Sabre's going to go with the airlines, unfortunately. So with American doing what it's doing today, it's going to have a hard time moving north. So
cool. And yeah, I'll stick with Take Two. Looks like it's starting to get into uncharted territory, hoping that it gets that pop that I was talking about. So, all right, guys, let's have a good day.
Yeah.
All right, I'm tuning into this